Okay, let's unpack this. The tech world got a bit of a shock recently, didn't it?
It really did, a proper jolt.
Yeah, I mean, think about Nvdia. Huge player in AI chips, right? Their stock dropped 17% on January 27th.
hmm And that wasn't just a small dip. That wiped out, what, $600 billion in value?
Exactly, in a single day.
Yeah.
Biggest loss ever for a U.S. company, apparently.
Incredible.
And here's the kicker. The trigger wasn't some big economic event. It was this name, DeepSeek, a Chinese hedge fund turned AI startup that kind of came out of the blue for many people.
Well, maybe not entirely out of the blue if you're watching closely in certain circles, but certainly a surprise to the wider market.
Right. And the speed was just, wow. They dropped this new language model, R1, on January 20.
And boom.
Yeah, their chatbot just shot off the charts. Most downloaded on iPhones almost immediately.
That kind of traction tells you something significant's happening.
Absolutely. So for this deep dive, we're leaning on some excellent reporting from The Economist. They've been looking into the reaction in Silicon Valley, the investors, the experts.
Uh-huh. And also whether Western companies are actually interested in using this tech.
Exactly. And the potential opportunities, but also the concerns. So our mission today really is to figure out why. Why is DeepSeek making such waves? What does this all mean for AI?
It's a crucial question. AI development seemed to be on a certain track, dominated by Western giants. DeepSeek throws a potential curveball into that narrative.
Okay, so let's get right to it. Why is DeepSeek considered such a major breakthrough? What's the core achievement here?
Well, the main thing, according to the reporting, is that their AI models, like R1, seem to perform almost as well as the top Western ones, think OpenAI, but, and this is the key part, using way less computing power. Which means much, much lower training costs. They've apparently used some innovative training techniques to get this efficiency.
Interesting. And this comes from Liang Wenfeng, the founder. Tell us a bit about him.
Yeah, he's 40, has a strong background from Zhejiang University Electronic Information, AI. He actually co-founded a quant hedge fund first called Highflyer.
Ah, okay. So a finance background, too.
Right. And DeepSeek sort of grew out of trying to improve Highflyer's own trading algorithms. They had this Fireflyer 1 platform, invested heavily in Nvdia A100 GPUs early on.
So that experience with high-performance computing must have given them an edge.
Seems likely. It's like they were using AI to get better at building AI, in a way.
And they made waves before R1, too, didn't they? With a cheaper chatbot.
That's right, yeah. They released a chatbot based on their V2 model that was super cheap. It actually sparked a price war in the Chinese AI scene, showed they could disrupt the market.
But Liang's goal isn't just cheap chatbots, is it? Sounds more ambitious.
Oh, much more. His stated aim is artificial general intelligence, AGI. He's focused on finding new model structures, ways to get more capability out of, well, limited resources. Efficiency seems core to their philosophy.
And the cost claims for R1 are pretty staggering.
They are. The Economist mentioned figures under $6 million to train R1.
$6 million. Compared to
hundreds of millions, potentially, for comparable Western models. It's a tiny fraction. Even OpenAI's Sam Altman called R1 impressive.
high praise. Though he also hinted OpenAI has better stuff coming.
Of course. He also said something about new competition being, invigorating, which it certainly seems to be.
But with claims this big, there must be some skepticism, right? Some questions being asked.
Oh, absolutely. While early tests do suggest R1 is powerful, people are asking questions. Did they underreport the number of chips they used? And there's this whole debate around distillation.
Distillation meaning?
Basically training a smaller model by having it learn from the outputs of a bigger, more established model. So the speculation is, did DeepSeek perhaps use results from American models, maybe violating terms of service? OpenAI has raised those concerns.
Okay, so there are definitely question marks. But even with those,
the consensus seems to be that DeepSeek has forced everyone in Silicon Valley and Beijing to rethink what's possible with less computing power. The challenge is real.
right. So let's shift to that Silicon Valley reaction. We mentioned the market drop, Nvdia taking that huge hit. What was the thinking there?
Well, the immediate fear was pretty straightforward. If DeepSeek's claims about efficiency are true, or even partly true,
Then maybe we don't need quite as many super expensive, power-hungry AI chips.
exactly, that hits NVIDIA's bottom line directly. But it wasn't just NVIDIA. Think about the whole ecosystem, AMD, chip foundries like TSMC, companies making servers like HPE and Dell, networking gear from Arista.
Even cooling systems.
Yeah, Vertiv, Modine manufacturing, and energy companies too, because the assumption was AI would need ever more power. DeepSeek challenges that assumption. Less compute needed potentially means less hardware demand across the board.
Okay, that makes sense for the hardware folks. What about the actual AI model developers like OpenAI or Anthropic? How did this hit them?
For them, it's more about investment and valuation. They've raised huge sums, often running at a loss based on the premise that building cutting-edge AI is incredibly expensive.
And DeepSeek comes along and says, maybe not that expensive.
Precisely, which could make it harder for them to justify those massive funding rounds and sky-high valuations if a competitor can achieve similar results for much less.
But it wasn't all gloom and doom, was it? The Economist suggested some potential winners.
Yeah, definitely. Think about software companies, Salesforce, SAP, others who build applications using AI models.
Lower model costs would be good for them.
Could be great for them. Lower operating expenses, maybe better margins. And Apple was mentioned too. Chipper AI could fuel more innovative apps, driving device sales, perhaps without Apple needing to invest so heavily in its own foundational models.
And the big cloud providers, Amazon, Microsoft, Google, they're in a tricky spot.
Very tricky, kind of caught in the middle. On one hand, cheaper AI could make their cloud software offerings more profitable.
But on the other,
On the other, they've poured billions into building their own AI infrastructure, developing their own models, and investing heavily in partners like OpenAI and Anthropic.
so DeepSeek's efficiency could undermine those big bets.
It potentially could, yeah. And it raises questions about their own custom chip development efforts, too, if the overall demand for high-end compute doesn't grow as fast as expected.
Still, despite that initial shock, some big players seem to be keeping the faith in AI's long-term growth.
Oh, for sure. You hear about SoftBank possibly making a huge investment in OpenAI. Meta is still pushing ahead with massive AI spending.
So what's the counterargument? Why might the demand for chips stay high?
One key point is the difference between training the AI and using it at the inference stage.
Oh, got it.
Even if training becomes cheaper, running these sophisticated reasoning models like R1 or OpenAI's newer ones still takes a lot of computational power during inference. That demand might not disappear or could even grow as AI gets used more widely.
And Microsoft was seeing supply constraints for its AI cloud services.
Right. They reported growth being limited by supply, not demand, which suggests companies want to use more AI even at current costs.
Which leads to another interesting point. Cost isn't always the main barrier for businesses adopting AI right now, is it?
That's a really important finding from surveys The Economist cited. For many companies, the biggest hurdle isn't the price tag, it's figuring out how AI actually applies to their business. They just don't see the use case yet.
But maybe DeepSeek changes that.
That's the potential opportunity. If the cost drops dramatically, maybe it unlocks applications that just weren't economically feasible before. It could broaden the appeal significantly.
So that brings us to the next big question. Are Western companies actually keen to use DeepSeek, this potentially cheaper, powerful AI from China?
Well, a major appeal The Economist highlights is the open source nature of DeepSeek's models.
Meaning companies can just download them.
Yeah, they're generally free to use. You can download them or run them on your own servers. That gives companies more control over performance and, crucially, privacy. It's a contrast to the closed API-based models from labs like OpenAI.
And are companies actually doing this in the examples?
Yes, several interesting ones. Glue, which is a messaging platform founded by Pat Gelsinger, formerly Intel's CEO.
Right.
They're using DeepSeek for chatbot features. Another one, LateNode, an automation platform, specifically mentioned R1's strength in non-English languages as a big plus.
Even competitors are looking.
Apparently so. Meta is reportedly studying R1, potentially to see what they can learn for their own open-source llama models. And some European banks, NatWest, HSBC, BBVA, are exploring it too.
Why banks specifically?
Strict confidentiality rules. Running an open-source model internally on their own hardware fits well with their need to keep data secure and private.
But alongside that interest, there must be significant caution, especially from Western businesses.
Oh, definitely. Security is a huge flag, particularly in the U.S. There's hesitancy about relying on models developed by a Chinese company.
Even if the risk of, say, hidden malicious code is low.
Even then. Plus, there's the political dimension. What might the U.S. government do? There's talk of potentially banning the DeepSeek chatbot on government devices, maybe even restricting U.S. cloud providers like AWS or Azure from offering DeepSeek models.
So, a potential regulatory hurdle. How does the situation look in Europe?
It's different. Europe doesn't really have its own homegrown AI champions at this level, not like DeepSeek or the big U.S. labs.
So they might be more open to alternatives.
Potentially. Plus, geopolitical factors could play a role. Past trade issues with the U.S., a desire maybe to diversify away from American tech dominance. DeepSeek could look like an attractive option in that context.
And DeepSeek leaning into openness by releasing their model creation code.
Yeah, that was another big step they took in late February, making the code behind how they build the models available. The Economist noted it got thousands of downloads quickly, showing real interest in their methods.
Okay, but there's a pretty significant elephant in the room, isn't there? Censorship.
A very large elephant. The models, particularly the chatbot versions trained for Chinese users, have Chinese censorship baked in. The example often cited is the chatbot refusing to discuss Tiananmen Square.
Which is obviously a non-starter for most Western use cases.
Absolutely. You can't have a primary information tool that avoids certain topics based on another government's rules.
But people are trying to work around that, like Perplexity.
Exactly. Perplexity, the AI search engine company, took R1 and essentially retrained it. They aim to remove the biases and censorship to create what they call unbiased, accurate, and factual
I
information.
think they called it.
R1 1776, a very pointed name. It shows the desire to harness the underlying tech while stripping out the parts seen as problematic.
Okay, so pulling all this together, what are the main opportunities and the main concerns emerging from DeepSeek's rise?
Well, opportunities first. Lower AI development and deployment costs, that's huge. It could mean wider adoption, new applications we haven't even thought of yet.
More competition driving innovation.
Yes. Benefits for software firms using these cheaper models. Maybe even some hardware sectors benefit long term if overall AI usage explodes. And, as we said, maybe a chance for Europe to gain some ground.
And the concerns, they seem pretty substantial too.
They are. Disruption to that whole AI hardware supply chain,
Yeah.
hitting the valuations of giants like Nvdia, increased pressure on Western AI labs like OpenAI.
And the security and censorship issues we talked about.
Big time. Security risks of using foreign models, the embedded censorship problem, plus a whole geopolitical angle of potentially becoming reliant on Chinese AI tech.
It's interesting that The Economist mentioned Liang Wenfeng himself sees China as having been more of a tech follower historically.
Yeah, he apparently acknowledged that China has often built on foundational tech from the West. He stressed that real innovation needs collaboration, something he feels China hasn't always excelled at despite huge investment.
So maybe DeepSeek is a wake-up call for everyone.
Could be for Silicon Valley about efficiency and cost. For Beijing, maybe about the path to true, globally impactful innovation.
So wrapping up this deep dive, it feels like the key takeaway is that DeepSeek isn't just another player. It's potentially shifting the whole AI paradigm.
I think that's fair to say. It's challenging fundamental assumptions about the resources needed for cutting-edge AI, shaking up the competitive landscape in a big way.
It definitely poses some tough questions.
Yeah.
For investors, for Western tech companies, even for China's own tech ambitions.
Absolutely. Where does the money go now? How do companies adapt? What does this mean for global tech leadership? Lots of uncertainty.
So here's something for you, the listener, to think about. What happens long-term if powerful AI becomes much cheaper and more accessible, developed outside the usual Western hubs? How could that reshape technology, innovation, and maybe even global power dynamics down the road? What new questions should you start asking now?